Welcome to Seeking Alpha Editors Roundtable. What moved markets this week for the week ending Friday, November 5th? Another very eventful week. We had the long-awaited Fed meeting where the Fed basically surprised absolutely nobody. We had a bunch of earnings reports, which were mostly positive, and we had today non-farm payrolls, and all of it led to a broad rally for stocks, the fifth straight week that the major indexes have advanced here across the board. And so I'm curious about what the panel of Seeking Alpha editors has to say about all of this, their reaction to the Fed and other things. And I will introduce them now in no particular order, joined by Brad Olison, VP of News, Kim Kahn, Senior News Editor, and Stephen Alfer, Managing Editor of Breaking News. I am your host and moderator, Nathaniel E. Baker, Senior Editor of Strategic Contributors. So let's go to Glasgow first to our friend Kim to give us the big picture view of what moved markets this week.
It looks like the Nasdaq is going to get its 10th up day in a row. And that pretty much tells you a lot of what you need to know about where this market's been going. We're in record territory for the broader market. And a lot of that, I think, has to do with the movement we've seen in rates. And I know we've talked about the Fed doing what was expected, but the Bank of England did something that was not expected. It kept rates steady, totally fooling the market, who had totally priced in a 15 basis point hike, pulling rugs out from under a lot of traders, and UBS called it playing the quid game instead of the squid game, but it was just as punishing if you were short, near-term duration in the UK. 2-year gilts, tumbled by 20 basis points in one session. And now we've got the 10-year Treasury yield, and that's down 20 basis points from its high. It's around 1.45%.
Yeah, by the way, references to Squid Games are going to be lost on me, as I have still not seen that program. But an eventful week, as we've said, lots of earnings and a lot of winners and losers there. Stocks have bounced around quite a bit. And so interesting to see who the winners and losers are. And with that, let's go to Brad.
So just starting from the top down, consumer discretionary names and technology names were among the best performing stocks this week. For one, in the technology space, there was a lot of chip makers. Qualcomm blew it out of the park with some of its outlook. NVIDIA, a major chip maker and graphics processor producer, did extremely well, partially because of a Wells Fargo note touting its exposure to the metaverse, which got a lot of attention last week with Facebook's renaming. A lot of other names followed suit. AMD, Applied Materials, KLA Tencor, and NXP Semi also recorded double-digit moves. Also within the strongest winners, consumer discretionary, as I mentioned before, there were some bullish underlying earnings from Canadian Goose, Under Armour, Tapestry, Phillips Van Heusen, CarMax, and some of the reopening names like Royal Caribbean, Norwegian Cruise Line, and Carnival Cruise, some of which also reported earnings. And we also can't forget Tesla, a huge participant in the consumer discretionary sector, added another 11% to its extraordinary week last week. And just to kind of Tesla gets a lot of attention because of the options, the underlying options activity related to its shares. Avis Budget, another rental car company, almost doubled after their earnings. They beat, I think, Wall Street consensus by more than 60%, and they also touted their potential moves into the EV space. That kind of got some of the meme vibes going, I guess, for part of this week as well. You had Bed Bath & Beyond go crazy after their results and buyback plans, and that just kind of exploded most of the activity. I think AMC and GameStop also did well this week on the back of that, but that was on the bullish side. No surprise when reopening names do well. As I mentioned, with some of the consumer discretionary names, you're going to have some of the names that did well during the pandemic sell off a little bit. Moderna and Merck dragged down the entire healthcare segment, outweighing most of the names in the S&P 500 healthcare sector, even though about 33 of the 60 some odd were in the green. Part of that was due to the Pfizer's positive pill news, similar to what happened with Merck a couple of weeks ago. And then also among those losers in the reopening names, we saw Peloton, which I think is the news of the week, dropping about 30% on the back of earnings there. Obviously a darling during the work from home, pandemic issues. Obviously, their forecast just failed to live up to expectations. Just a quick tout for our quant team here at Seeking Alpha. They wrote out a couple of notes that you may want to look at, touting the fact that they kind of foresaw this Peloton disaster coming in shares.
Very interesting. All right. Next up, Stephen Alford joining us from what appears to be an underwater location somewhere. At least his background is different this week if you're watching the video. Go ahead, Stephen.
Yeah, it's one of the newsier weeks in my memory. It combined massive amounts of earnings reports with all the macro news that went on. It's actually hard to pick anything out. Kind of overwhelming just to pick out a couple of things to talk about. I'll quickly talk about Mondelez earnings. Mondelez, if you're buying some sort of a processed brand in the supermarket, there's a pretty good chance it's a Mondelez brand. Think of Oreos cookies, Ritz crackers, any other number of brands. CFO Luca Zaramella on their earnings call. What we're seeing at the moment is that elasticities are more benign than they have been historically. I'll translate that. That means price increases are not leading to volume declines.
Yeah, very interesting. Wow. Yeah, a lot going on. But let's move on to the second segment of our show where we discuss our favorite stories, articles from contributors, tweets, or other things that we have seen in our travels. I am informed that we cannot choose our own tweets, which is unfortunate because I had one ready to go. But let's start with Kim.
Well, our friends at Data Tech Research came out with a note on retail investor interest, which they gauge through Google search trends. And they're saying like the searches for things like buying stocks, investing are trending up, which their conclusion is it means some more new money coming into the market, which bodes well for a kind of market melt up into the end of the year.
All right, Brad, what about you?
Well, while we're on the topic of kind of valuations and riding some of the momentum, I think an interesting item from Clark Schultz on our news team, just talking about what you need to know about the Rivian IPO. Right, Rivian's an electrical vehicle maker. They're going to debut their pickup truck as kind of, they started making their deliveries already in September, and they're about to come public at a valuation at over $60 billion. So this is a company that really hasn't done much yet. It's only really been in delivery mode for the past couple of months, but its valuation already rivals that of Ford and GM. It's only a few billion shy of them. Interesting, within their IPO filing, they tout a total addressable market of $9 trillion. I feel like I should put my pinky to the side of my mouth when I say that. And the serviceable available market at $1 trillion, they tout their ability to not only their vehicle technology, but that they have a cloud service element to their offering and product development, analytics, accessories, and they're basically calling it an ecosystem. So, one of the more widely anticipated IPOs to expect to come public in the next, few weeks or so. So highly recommend everyone just take a quick look at that and read some of our coverage on it, because it will, not that it'll be Tesla anytime soon, but it's definitely nothing to sneeze at.
They're still using the term ecosystem in these marketing materials, and it's working. All right, well, whatever works, I guess. Stephen, what about you?
My favorite story is one that Kim did this morning. Disruptor stocks are getting hammered. We're talking about some of the work from home favorites: Zillow, Robinhood, Fiverr, Zoom, Zendesk, Peloton, Moderna. That's just a partial list. There's a few more. These names are down between 40. I mean, they're going down so quickly. I might have to change the numbers, but I'm thinking between 40 and 65% from all-time highs. So, disruptor stocks, yes, but also they're also work from home favorites. And to the extent that the pandemic is behind us, they're struggling. These stocks were trading at crazy multiples. It doesn't mean they're great companies with maybe great futures, but when you're trading at such high multiples, all it takes is the most minor of missteps, and you just get sold off like crazy. So it'll be interesting to see either, maybe there's some bargains here. I don't know. Maybe the pandemic's going to make a comeback, and maybe it's a buying opportunity, or maybe they're just going to go back to, they're going to have to deal with the stock market like every other company.
Yeah, and continuing in this pandemic reopening play theme, I'm going to highlight a concept that many of us have probably forgotten about, namely shoes. Now, if you live in a warm climate, you probably haven't worn these things in about 20 months or so. And even if you aren't, you could be forgiven for having forgotten what they are. Well, they go on your feet. You wear them out when you go to events with other people. And a contributor here, Bulls Bay, who is a new contributor to Seeking Alpha, who has quickly gained a lot of acclaim with their really wonderful articles here. And they talk about this issue here with Shoe Carnival, stock symbol SCVL, and they are bullish. They say this stock has a 25% upside. The market is ignoring the fact that they are holding cash and marketable securities. The company has a new partnership with Nike. And yes, people returning to the office, returning to civilization is going to lead to more purchases of shoes. So I found that very interesting this week. And that will conclude our roundup for this week. Thank you all for being with us. Reminder that you can catch this video on Friday afternoons by 4 p.m. at the website seekingalpha.com. And to listen to the slightly more longer audio version, you need to log into or subscribe to the Wall Street Breakfast podcast account, and you will get that then on Saturday morning at 6:30 a.m. And with that, we thank you for being with us again and look forward to speaking to you again next week.